The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. My name is Mark Toby, and I am the Disability Income Specialist here at One Resource Group. And I would like to welcome you to our first installment of webinars to coincide with Disability Income Awareness Month. We will be having webinars every Wednesday at 2 p.m. Eastern Time. Today, we have invited Dave Plum, Regional Sales VP with Illinois Mutual. And Dave will be going over ways to position disability into your practice, sales ideas that you can use right away, and identifying your target markets, and finally, some of the popular plan designs in the disability field. Please feel free to send any questions that you have during this webinar through the chat feature, and at the end of the presentation, we will have a question and answer session. So at this time, I would like to present Dave Plum with Illinois Mutual. Dave, thanks for being here.
Hey, my pleasure. Thanks, Mark. And hello, everyone on the line. As always, greatly appreciate the opportunity. Org's a special place. One Resource Group, love the folks there. And for the agents that are on the line, I'll just tell you, with Mark and his team, you're in great hands. I mean, I'm really just kind of a conduit, work a lot with Mark. And yeah, I think really today, just I'm not here to make you a disability expert by any means, but just want to talk through a little bit about where we fit in the marketplace, and just kind of give you some sales ideas because, you know, this month, the month of May, today starts Disability Insurance Awareness Month. So it's great to have that added focus on such an overlooked product that's out there like income protection. So again, I just really appreciate the opportunity. I got about 30 minutes worth of material. We'll go from there, and then after that, we'll have some Q&A, but definitely if there are some questions along the way, everyone's muted. Feel free to use the chat feature in there. Somebody will be watching that, and then we can kind of go from there. But again, Mark, appreciate the opportunity. Everybody on the line, hey, really appreciate it. Thanks for taking time out of your busy day today. So first, I want to get started with who is Illinois Mutual. We're really, our cornerstone is individual disability insurance. And, you know, some things I like to point out about us, we're a mutual company. Not many companies are mutual anymore, but, you know, at the end of the day, we're service driven and we're directed by our policy owners. In terms of our financial strength and stability, we're on our 5th generation of the McCords running Illinois Mutual. We've been around for over 110 years. We're A-rated carrier. We got a strong capital position. You know, we're over, as of 22, we were 1.58 billion in assets. We're now 1.6 in assets. So again, at the end of the day, we're there to make sure that we can satisfy the promise that we made to those policy owners when they need us the most. So, you know, having the financial strength, the stability, and being directed by our policy owners, that's really who we are and what we do. And like I said, again, Illinois Mutual, our cornerstone is the individual disability insurance. And I always like to point this out because I think disability insurance often gets overlooked, but we're actually protecting a person's most valuable asset, because when you look at this financial pyramid, and I think it does a great job just really talking about what we're looking at today, it's the paycheck that makes everything else possible. So think about all the other lines of business that you're writing, whether it's those retirement funds, the annuities, the life, health, maybe you're a P&C, but from a client standpoint, let's even go a little bit down on that rung when we're looking at the mug expenses. The bare minimum, mortgage, utilities, groceries, that's, you know, if paycheck suddenly stops, we need to make sure that we're at least covering those. So again, when we're looking at this, it's really that paycheck that makes everything else possible. I always like to talk too about what is disability insurance. And I said it early, DI protects your client's most valuable asset. Couple of different ways that I like to bring it up in conversations is, what if your last paycheck were literally your last paycheck? Think about that for a minute. I mean, you see on Facebook and all social medias the GoFundMe, and somebody has a tragic accident or comes down with a tragic illness, and man, I tell you what, I don't want to have a church benefit on my behalf if something were to happen to me. I want to make sure that we do the right thing here on the front side and make sure proper coverage is there. And again, we're protecting our client's most valuable asset. So that's really what we're looking at. When we look at disability insurance, we're looking at protecting the client's most valuable asset. Couple of things. I'm not going to stat you. I'm not going to stat you to death today, but a couple of things that I like to point out. Folks often say, hey, people I work with usually have something through work. And I'll just tell you, most of the time, that's not the case. If you look at that stat there on the right-hand side, 67% of the private sector workforce has no long-term DI. And some things I'd like to point out is that your clients, when you position disability insurance, they're not going into all the bells and whistles and the features and this and that, and they're wanting to know three basic things. How much do I get? When do the benefits start, and how long do they go? Let me repeat that. How much do I get? When does it start, and how long does it go? That's really the big breakdown that we're talking about here today. So again, most of the folks out there do not have a long-term disability plan, but one of the questions that I just brought up is answered there on the left-hand side, that statistic. Nearly 63% of Americans would experience financial difficulties if their paychecks were delayed by a week. So think about that. A lot of folks are living paycheck to paycheck, and they're saying, I need those benefits sooner rather than later. When I talk about this and I think about plan designs and what's out there and what's available, absolutely, we can write the Cadillac plan all day long, but what we typically see is our clients are on a Chevy budget, okay? So when we're looking at these, lesser elimination periods, we're writing 2 and 5 year benefit periods. And I'll go through and I'll show you kind of, again, some costs of what some popular plan designs out there look like. Where disability is typically marketed, okay? So I've been doing the disability gig now for the better part of 20 years, and definitely a lot of carriers have gotten out. The marketplace itself has just shrunk quite a bit. End of the day, there's probably about 10 different, I would say, individual DI carriers that I would say do a good job. Of those, the vast majority of them are looking at the top 5% of the population. They're going after the doctors, the dentists, the C-suite executives, your attorneys, folks like that. But what about everybody else that's relying on their paycheck? So I think historically, Illinois Mutual has been seen as that blue-gray collar, but I'd like to take it even a little bit farther. I think we're that middle America carrier, where if your clients are making anywhere from $150,000 or less, that's definitely the wheelhouse that we're in. That's the sandbox that we play in. So when I look at, who's buying our stuff, what does it look like? Our average policy owner is 38 years old. I'll just tell you, when we're talking about this, typically what we'll see is anywhere from 25 years old to about 55 years old. That's really the sweet spot for disability insurance. You take that need for life insurance, that's birth to death. Long-term care, that's preservation of assets. So you're starting to have those conversations, hopefully 55, 60, things like that. That's really the back nine. Again, preservation of assets. The DI portion is the front nine. That's the beginning conversation that's there. So again, our average policy owner age 38 years old. Average benefit amount, $2,500. I mean, and you look at that and it's absolutely people qualify for more. However, what we see, that's covering the basics. That's covering that mortgage, utilities, groceries. Again, the 3 basic essentials that are needed out there. And we're designing plans that fit within a person's budget. As we look at income, I mean, for us, 95% of our policy owners are making $150,000 or less. As we're looking at those benefit amounts there, you see on the right, again, the average is, you know, $2,500. Over half of our policies, that $1,500 to $3,000 is kind of right there in the wheelhouse. Certainly we can do more, certainly we can do less, but again, I'm just trying to throw that out there because when you compare that to other carriers that work in different markets, those are really low benefits. But again, it's middle America, it's affordable, and it's relatable to some of those basic expenses. Here are some of the common industries that are out there. You know, we write a ton of business owners, and I think really where we do a good job is everybody's going after the dentists, the doctors, the C-suite executives, but take a look at the folks that you come in contact with before you're ever sitting across, before you're in the room with, say, that doctor or the dentist. You're looking at dental hygienists, nurses, paralegals, folks like that. That's really a ton of who we write, what we do, and how we do it. Skilled trade folks, you'll see on there, we write a ton of those occupations as well. So again, here's just kind of the industries that we write, some of the more specific jobs are on the right-hand side. And again, that's our DNA, that's middle America. Some things I like to point out, common claims, you know, for us, I know when I see statistics with other carriers that are out there, injuries represent a small block. We're insuring everybody to where injuries happen, and they're tied right there with muscle, skeletal, connective tissue. So you think of like back and joint diseases, things like that. Those are some things that are going on there. So here's kind of what our claims look like. What I like to point out is look at the stuff there on the right, because those claims that you're seeing there on the left aren't necessarily knocking folks out to quote unquote normal Social Security retirement age. The average Illinois Mutual DI claim is about 12 months. So again, as we're designing those plans and we're pulling the levers as we look at, you know, that shorter elimination period to make it affordable, we're looking at shorter benefit periods. So look at that 2-year and the 5-year. That's about 60% of the policies that we write are 2 and 5 years. You compare that to the industry, not many other carriers do it quite like us. But again, when we look at who we write, making the plans affordable, that's really what we see. So the shorter elimination periods, folks need the benefit dollars sooner, less on the backside. And I'd like to point out too that a 2-year benefit period is something that can be used multiple times, okay? And what I mean by that, so you take a look at, you know, say the client develops cancer. That's a particular claim that'll pay up to 2 years for a 2-year benefit period. If something else happens, say like heart disease, stroke, things like that, or there was an injury, that's a new claim and there's 2 years of benefits on that. So it can be used multiple times, but it'll never be more than 2 years for that particular claim. So again, I think there's a big misconception on that, and what we're seeing from our claims data, you know, getting the benefits sooner rather than later and making the plans affordable with the shorter benefit periods really goes a long way. I think DI gets overcomplicated. I really do. And as we're talking about that, again, I'm going to go back to something that I said earlier. This is what your clients want to know. How much do I get? When does it start and how long does it go? So when you're talking to folks, keep it just that simple. Those are the 3 basic questions that they're going to ask you. And that's really a good track for you to be able to have those conversations on, okay? Again, how much do I get? When does it start and how long does it go? Here's another one. I've been using this one a ton in the disability world. Is I always ask my clients, do you have a mug plan? I ask them, they're going to look at me like, I don't know what the heck you're talking about. Well, if something happens to you, at minimum, let's make sure that we're covering the mortgage, the utilities, groceries. I want to keep you in your house. I want to keep the lights on and make sure you can eat. At minimum, that's what your clients need. So that's really the fundamental starting point for those DI discussions, and then going from there. But at minimum, if your clients are relying on their paycheck, they need to have a plan like this. So make it simple, make it affordable. And when we talk about affordability, here are some various scenarios that are out there, because I'll show you a few different occupation classes. We'll look at some different benefit periods, but you know, we've got a 35-year-old occupations of class 3, so that's right in the middle. Say they're skilled trade folks, things like that. Again, somebody that we see quite a bit. We're looking at a $3,000 a month benefit, ability to buy more coverage. Oh, by the way, if they don't use it, we'll get all their money back to them from 65 to 67 with our return of premium. And with our return of premium, that's going to be in all of these various scenarios that I show you, but I'll come back and I'll show you exactly how our return of premium works, because I'll just say it's not gimmicky. It's all your premiums minus any claims, and we'll go through some stuff there. But so for this example, we got Dylan, 35-year-old. We got a basic MUG plan, future insurability, return of premium. It's less than $100. And those benefits kick in 30 days, and it's a 2-year plan. Okay, let's say Dylan is more of a saver. Instead of a 30-day, we're looking at a 90-day, and we bump the benefits out from 2 years to 5 years. The exact same scenario, under $90. So again, as we're looking at this, let's make sure we show our clients a plan that's affordable, something that fits within their budget, because look at this is a really good option for somebody like this. And sure, we can show them a Cadillac plan all day long, but if it looks expensive to you as the advisor, it's probably going to look expensive to your clients as well. So alleviate that sticker shock right out of the gate. Here again, this example's less than $90. We got Ryan, class 5. So instead of skilled trade, things like that, this person is more office, administrative, sales, somebody that's our top occupation class. Exact same scenario that we saw for Dylan, $3,000 a month, 30-day wait, 2-year benefit period. It's less than $70 a month. Let's take him out there to a 90-day 5-year, $60 a month. So again, with all of these, we're still talking about return of premium. Let's look at a couple of females. So again, we'll look at class 3, class 5. We got Emma here, 30-day, 2-year, $3,000, future insurability, return of premium. You'll see that females are a little bit more expensive. So I say that because it's exactly the opposite in life insurance. Life insurance, females live longer, so premiums are a little less. It's exactly the opposite on the disability side, because with us, what we see, females go out and claim more than males do. So they make it up on the life side. It is a little bit more expensive on the disability side, but still very affordable. 30-day, 2-year, $3,000 a month. We're looking at less than $120 per month. Same scenario. We've got the 90-day 5-year. We're looking at, you know, basically $130 a month for this, for Emma. Let's look at a class 5. Again, office, administrative, sales. For this person, 30-day 2-year, $90 a month. So again, very affordable, something that fits well within their budget. Let's look at that 90-day 5-year, less than $90 per month. So again, when we're looking at these, affordability is huge, especially in middle America, where they're absolutely price sensitive. So again, designing the plans that fit within their budgets, that's where you're going to have success. It doesn't have to be all the way to age 67 with all the bells and whistles. Let's make sure that we find the right product for the right person at the right price, the 3 Ps of DI. When we look at return of premium, this is where it gets sold, okay? Because without it, they're going to pay $666 for Megan, who's a 35-year-old. So if we look at that over 32 years, she's going to pay $21,000 into the policy. If she never goes out on claim, if she never uses it, guess what? She gets $0 back. Our return of premium, how I position it is that, would you be interested if I could show you a way how to get all your money back if you never use it? Would you be interested? Absolutely, everybody says, yeah, I'd like to learn more. That sounds intriguing. This is where the sale's made, because on the right-hand side, we've got the base, again, the annual premium, $666. The return of premium on an annual basis, $333. So we're looking at $1,000 essentially. So $1,000 over 32 years, $32,000. If she never goes out on claim at 67, we cut her a check for roughly $32,000. Now, all your premiums minus any claims. So say Emma maybe went out on claim for a couple of months and collected $6,000 of benefits over 2 months. We're going to cut her a check for $26,000. So again, it's not gimmicky. It's all of your premiums minus any claims are what we get paid back to your client. So this is, other carriers have return of premium. It's not as straightforward as ours. And the thing that I like most about ours is that we were the first to introduce it to the marketplace. We rolled it out in 1972. To date, we've refunded over $203 million to our policy owners. It's hard for me to be in a group with seasoned agents that have been around with us for a while that don't stand up or raise their hand and be like, you know what? Within the last couple of years, I've had some clients that have received a check for 20, 30, 40, even north of that, because they never use their benefits. They're there when you need them, but if you don't need them, could you use that money back by paying just a little bit more? Again, this has been huge. Return of premium, it's a monster. So you'll see it's anywhere from 65 to 67. Through that window, if you cancel the policy will go out to age 67, but from 65 to 67, if you surrender it at that time, you're 100% quote unquote vested. You'll get all of your premiums back. So again, great feature for us. I'm not going to spend much time with this, but just with disability insurance, think about it similarly from a process standpoint, like life insurance. The older a client is, the more benefits that they're looking for, the more stuff that we as an insurance company need. Goes hand in hand with what you see from life insurance. So here are our limits: 5,000 or less for a 50-year-old non-med, 5,000 or more. It would be an abbreviated paramed, blood and urine. So most of what we see is streamlined underwriting, where we're not needing the paramed, the blood, and the urine. There's also the financial documentation side. So the more benefits that you're looking for, the more we might need from a income documentation standpoint. So W-2 person, 5,000 or less, we're not needing income docs. If they're a small business owner, 1 year. If it's 3 to 5, over 5, we're looking at 5 years tax returns. Small business owners, just that shouldn't be an obstacle to provide those, because they need to provide tax returns to do just about anything as a small business owner. So asking for income documentation shouldn't be a big deal. And this is where I kind of like to interject. The basis behind disability insurance, it's not there to make a person rich. It's to make sure that they don't go poor. That's where DI comes in. So I always like to segue that in, because we're looking at the financial justification and how much can we get and this and that. It's there when you need it. It's not there to, again, not there to make you rich. It's to make sure that you don't go poor. Some things about us that we do better than other carriers, just a few different things. We write part-time workers. Since COVID, there's a bunch of part-time employees that are out there working multiple part-time jobs. That used to be a No on the DI side. It's something that we can absolutely do. We can also write stay-at-home spouses that's out there that's very unique to the industry. And I say that just with the caveat of we need to make sure that we write the wage earning spouse, and then we can look to get coverage on the stay-at-home spouse. You know, think about it. Well, why would a stay-at-home spouse need income protection? Well, chances are they're home because they have kids. If they go down and they're unable to care for the kids, they're going to need somebody to do that. So that's really where that benefit comes in. You'll see here we write a ton of farmers. Farmers are a big segment that we write. End of the day, farmers don't show an income usually because they'll write off stuff. You know, you depreciate the combine and other, you know, farm equipment that's out there. They're showing Uncle Sam not much in the way of income. They're a great claim risk for us. So based on their herd size or acreage, we can get them up to $3,000 for individual DI and also $3,000 above and beyond that for a business expense. And I'll talk about that particular plan here in just a bit. A couple of other unique things that we do. If you're working with folks on this page, mechanics, skilled trades, dental assistants, dental hygienists, cabinet makers, carpenters, you know, stuff like that, we bump up their occupation, one occupation class. So when we were looking at Dylan and Ryan and Emma, you know, we looked at, we'll upgrade somebody from a 3 to a 5. It doesn't sound like that big of a deal, but if you remember, we probably just said by getting a better occupation class, it's a huge driver in price, we probably just saved them 30%. So, I mean, I say that because that, man, that's huge. In these particular occupations, we've got a W-2 upgrade that we do, and it's been a game changer for us. So if you're working with folks on, you know, one of these occupations, you're not going to find a better carrier, just point blank. I like to point that out. Target markets and things like that, you know, everybody's, I would imagine, has a dental assistant, has a, you know, dental hygienist that they work with, a mechanic, your hairstylist, your barbers. We've got specific marketing pieces for that. But then I like to transition that into, chances are they're part of some sort of an association. We've got one of the easiest association discounts to set up. To basically, we need a letter of endorsement from the association. We need the agent to fill out a fact finder, and that becomes your exclusive association and your exclusive discount that's available. We've got some great things that we can put on their web page. We've got links to be able to a co-branded piece with the agent and the agency's logo, be able to click on that, and then as association members go there for additional information, we'll send that back to the agent. Just again, different ways of working with folks that we see in our market. It's been huge for us. You're going to be hard pressed to find an occupation that we don't write. Few folks that I like to point out, linemen. No, I'm not talking about the linemen for the Indianapolis Colts. Think about those folks that are climbing up poles and, you know, the dangerous jobs that are in the cherry pickers and stuff like that. We'll write them. We'll write bar owners. We'll write social media influencers. And, you know, these are ones that we just added not too long ago because there was a need and said, yeah, let's try it. So again, not too many occupations out there that we won't write. Another thing that I like to point out, because medical residents, that's a big industry for disability insurance. And while we do them, that's not really, quote unquote, our sandbox. We're more middle America, but folks entering into the workforce, chances are, need education, need some sort of a program for them to be able to get licensed in their trade. You know, like a dental hygienist, like an electrician through their apprentice program, a plumber, same thing through their apprentice program. Barbers, they go to barber school, chiropractors. Yeah, I mean, I just say that because things that we're able to offer, if you've got an in with one of those programs, or schools, if they're within 6 months of completion and being able to go out into the workforce, we're able to offer them coverage without them showing a dime of income, because we know in just a few short months, they're going to be out there in the workforce, and we want to get them coverage sooner rather than later before something happens. So again, if you're working with folks like this, if you've got, a local carpenter union that has an apprentice program, have these discussions. And oh, by the way, we've got the marketing materials to go along with it. Again, we're looking at being able to get them something before they enter the workforce. And, the younger they are, the cheaper it's going to be. We've had some pretty good success with this program. Just as I'm looking at this, just a couple of last things. Business owners, when you look at the coverage that's out there and available for them, with business owners, what do they have that a W-2 person doesn't? They have business expenses. So there are business expense plans that are out there. And oh, by the way, with us, our business expense, you can offer return of premium. We're the only one out there in the marketplace that does that. But in the event they become disabled, guess what? They're still going to be obligated to pay those fixed expenses: payroll, taxes, utilities, car lease, the rent, the mortgage, stuff like that. Think about those ongoing fixed expenses. So we need to protect their income, but usually having this conversation about business expenses with those business owners, I find it goes over easier and it's more relatable. So again, just knowing that plans like this are out there and they're available in your hip pocket. I said earlier that those 3 questions your clients want to know: how much do you get? When does it start? How long does it go? There's also this important question that they're going to ask you: do you own it on yourself? Do you believe in protecting your income? There's one of 2 ways that you can answer it. And I really think there's only one way that's appropriate. So be the guinea pig. If you're not familiar with disability insurance, how it works, what the process looks like, take an app on yourself. Again, I'm not saying you need to buy the Cadillac plan, but buy the Mug plan. If something happens to you, there's a reason why you're working. There's a reason why you're investing in yourself today to become more knowledgeable when it comes to income protection. Take that next step and get a policy on yourself. I'd encourage you to look at Illinois Mutual too, because when it comes to agents out there, we do a great job. And oh, by the way, we're going to be able to offer you a discount as well. So DI plus Y, get it on yourself, know what the process looks like. And that way, when those clients ask you, be like, absolutely, I know. I can't imagine not having it, because at the end of the day, my income is my most valuable asset. As we look at those, just a couple of, hey, what's in it for me? Why do I want to do this? I'll just tell you, from a renewal standpoint, renewal income when it comes to disability insurance, there's nothing like it. First year is great. However, when you're looking at incorporating this into your business, you're going to find those renewals really add up. On the front side, we always have our quarterly incentives going on. 2 apps, $2,000 of annualized premium paid for within a quarter. It's $300 that we pay you. 3 apps, $4,000 of annualized premium. Level 2 is $600. Level 3, 4 apps, $6,000 of annualized premium. Cut you a check at the end of the corner for $900. Also, because it's Disability Insurance Awareness Month, starting today and going through the end of the month. So you have 30 days, including today, to be able to write income protection. Not only will you qualify for those quarterly bonuses if it's 2 apps or more, 2 apps, 2,000, but each of those apps is going to earn a $100 bonus. Got to receive it from May 1 to May 31st. It's got to be paid for by the end of July, and it needs to be a minimum of $200. So I bring that up. That's what's in it for me. Again, every month it's important, but life happens. Illinois Mutual is really one of the founding insurance companies of that. We believe in life happens, brought the Disability Insurance Awareness Month to the marketplace with a few other carriers. And we put our money where our mouth is. It's something that we believe in. And again, while it's important every month, let's make sure that we have an added focus here in May. So with that, I have done a lot of talking. I went a little over. Mark and attendees, my apologies. But with that said, Mark, were there any questions or anything folks need help with?
Yes, Dave, we had a couple of questions, but at this time, if we have any agents on the line that have some questions, you can go ahead and submit that and we'll make sure that Dave answers them for you. But for the questions that we do have, I've got one from an agent where he's asking, is the ROP rider available with any benefit period? So can you get any benefit period and get it?
Great question. So yeah, I know where you're going with that. Our ROP is available on a 2-year, a 5-year, a 10-year, as well as a benefit period out to age 67. We do offer a 6-month and a 1-year. Honestly, we don't sell a lot of it because that 2 years not that much more expensive, and that's where ROP becomes. So 2 years and longer for a benefit period, absolutely, it is available.
Okay, we just had one come in, and the question is, what other products do you combine with this product typically? So I'm assuming that they mean what other insurance products besides the disability go together with this?
Yeah. Mark, I'm sorry, could you repeat that one more time? It was kind of breaking up a little bit on my end.
Okay, no problem. So the question is, what other products do you combine with this product typically? And so I'm assuming they're asking, is there any products that always go side by side when you're selling a DI?
Okay, yeah. I guess I would say with that is what we're talking about is income protection. So what are some things that I believe in disability insurance? I think that's something that I gotta have. I mean, I don't think that disability, and there are agents out there that just do this. There's no question about it. They're successful, they do just that, but the majority of the folks that I see that do it and do it well is part of an overall financial plan to where they're having the life insurance conversations. They're, if they've got the lazy money somewhere from an old job and, an IRA is just kind of on the sideline, right. Annuities, a money manager, DI, as they get older, having the long-term care discussions. I mean, and if you're a business owner, if you're dealing with business owners and you're in the business market, have the conversations when it comes to a business expense plan as well. Because it's one thing if we're protecting a person's income, the other thing is let's make sure that we're covering those expenses as well, because you've worked so hard for that business. If something were to happen to you, you'd hate to see something happen to it. And again, it's not there to make the person rich. It's to make sure that they don't go poor. And the benefit periods that we see for those overhead type of plans are usually 2 years or less, because let's face it, if the rainmaker of that business is not able to go there for 2 years, what's really going to be left after that? It allows them time. It's, whether they get better return, they sell the business, they slowly close it down, things like that. But that's what we see. And when I think of other stuff sold with DI, it just goes along with that financial plan that you're putting together for those folks. Life and I'll just say, I don't think life insurance and DI is an either or conversation, because they do very different things. But I'll just put it to you this way: nobody ever dies and then becomes disabled. Okay, if it's going to happen, it's going to happen on the flip. So you've got that DI coverage there when you need it, when you're unable to work and the expenses are coming in. And then there's life insurance that after a person passes, so they really go hand in hand. But again, it's not an either or. I think it's that total protection umbrella that folks should incorporate into what it is that they're doing. So that was a long-winded answer. I'm sorry.
That's great, Dave. And we got a couple more. So a question we have, an agent is asking, is there a typical percentage of someone's income that you use? So the actual question is asking, should you keep the premium within 2 to 3% of their monthly income? And so is there a general rule of thumb that you want to try to keep your clients in?
I do. I mean, 2 to 3, I like to say 1 to 3% of a person's income. Obviously, it comes down to how old they are, what kind of job it is, things like that. But when you break it down to income, folks always ask, how much does this cost? I was just like, well, take a look at it. It's usually 1 to 3% of a person's income, or, it comes down to, in some of the examples, cutting down on a few Starbucks that you drink during the course of a month. You think about it that way. So that's kind of how I would answer it from a percentage of income. And then you had also said didn't you also like how much coverage can they get? I think was also kind of embedded in there as well. So, I mean, usually around 60% of a person's income, but I'll just say it's a sliding scale because, a lesser income, we're able to get a higher percentage, but as income goes up, we're still able to get more coverage. However, it's a reduced percentage. From a percentage standpoint, I always say like 60%, but I will say our 2-year benefit period, we've got higher participation rates to where it's closer to 70 is what we see. We can get higher benefits for a 2-year benefit period or less. So, yep.
Okay, so next question we have, Dave, is agent is asking if these plans work for a self-employed individual. We talked about, people who have salaries, but
yeah,
how does this work with when somebody's self-employed?
It works perfectly. And I say that because we write a lot of small business owners. If you're self-employed, so I talk with my hands a lot, but just kind of visualize this a little bit. I ask a small business owner, how much do you make? They're going to tell me top line revenue. So that's a number up there. And then my follow-up question, I always get a little bit of a smirk when they go to answer this, but they're like, my thing is, how much do you report to Uncle Sam? Kind of smirk, and it's a number significantly less. So where my hands are at, the difference between those two heights are business expenses. So we can write coverage on what they're showing Uncle Sam, okay? We can write income protection for that reportable income, but we also have a business expense plan. So it's not an either or, it's a combo sale. And again, having the business expense plan conversation, it's pretty easy. Because, let's face it, business owners know what they pay month in and month out for, their car, their cell phone, their rent, their payroll, taxes. They all have attorneys, they've got CPAs, those ongoing business expenses that they write month in and month out. So again, does it work for self-employed folks? Yeah. And I also, the business expense plan that I'm referring to, it's specifically for small business owners because, if something happened to Jeff Bezos, for example, and Amazon, guess what? I'm still going to order something from Amazon Prime and I'm still going to expect it tomorrow. But if you have a small business where maybe there's a couple of employees and they're relying on the owner as the rainmaker, or, think about a dentist or the mechanic running a mechanic shop. If they're not there, there's going to be a huge loss. So it's usually best designed for small business owners. And people usually think, oh, that's only for big businesses. No, it's specifically for those small business folks. So that's how I would answer that one. But no, I mean, specifically, DI works extremely well. We write a ton of small business owners. So yeah, that's definitely our wheelhouse for sure.
Okay. All right, we got just 2 more questions at this point.
Wow, these are good questions. Nice. Engaging crowd. Thanks, everyone.
Yeah, these are great. All right, so the next question, agent is asking if Illinois Mutual has a marketing package for Disability Income Awareness Month that might include social and mail
Absolutely.
items. So what does an agent do if they want to get their hands on some marketing materials?
So yeah, we actually have a disability insurance awareness playbook that's available. Mark, how about this? Let me get it to you after our call. Folks that are on there, you can definitely pull it down from our website. That's there, it's available. But circle those back to Mark there at One Resource Group, and he'll be able to show you the marketing collateral that we have. I would encourage you to like us on Facebook, on the social media platforms that you use. If you like us, you're going to be able to share our content. And believe me, we're always putting out good stuff, but we put out more stuff during the month of May. So I'd encourage you to do that. Again, marketing collateral, certainly stuff that we could get you, but specific to this month, we do have a quote unquote DM playbook that we can get you for sure, bud.
Okay, well, it looks like at this point, Dave, we got one more question. If there's any agents that have a last minute question, now's the time to put that in. But Dave, so the final question I have now is, in your presentation, you showed a non-medical underwriting criteria. And the question from the agent is, do you have to count or factor in other coverage that a person has when looking at trying to qualify for the non-medical underwriting?
We do. So that is something that we do. We take into account underlying coverage. So if we're coming in at a second position and they've already got 2,000, that gets added to ours, and it does include, it is added into those limits. So to that point, yes. But that's a really good question. However, I mean, we don't see that a lot. I mean, I just say that because with us, the markets that we're writing, things like that, sure, there could be other coverages that are out there. That's not usually what we see in theory. So I mean, I guess I would just kind of, it's not a huge obstacle to overcome that's out there. So yeah, I would answer it that way.
Sure, Dave, thanks. And it doesn't look like we have any further questions, but for those of you still on the line, I will tell you, Dave's a great resource for me. Illinois Mutual is a fantastic company, probably in the top position for those blue collar workers, farmers. They're usually going to be best in class, and they're a great company to work with. So I don't have any hesitation on sending out proposals from Illinois Mutual when it fits the client's needs. But Dave, thank you so much for being here today. And it's been a great resource for us. So thank you again, and thank you for all the agents that have been on this call. have a great rest of Disability Income Awareness Month. And again, we have webinars every Wednesday, 2 p.m. Eastern, if you'd like to join one of those. So thank you, Dave.
Yep. Thank you, Mark. And thanks everybody for taking time. We appreciate it. And I'll just tell you, you're in great hands. Mark Toby and his team there at One Resource Group, they're rock stars. So yeah, don't hesitate to reach out to them. They're awesome. But again, thanks for everything, folks.